What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol FTCH for Farfetch Ltd. On the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First thing I need to make you aware of is that these guys did give us an earnings announcement after the bell today, so let's flip on our extended hours session and see what is going on with the number. So just based on this, right, it does look like we saw an opening drive higher or initial drive higher, and we've since dribbled off and are closing or starting to close some candles underneath today's low of day. So for the sake of today's video, let's just assume that we're opening kind of around here, 37.50 just for round numbers sake, and the pre-market low will be somewhere down here around 36.65. Shifting the attention back over to the daily time frame now, let's talk about gap rules and how we typically tend to play these things on the next morning, right? So whenever we have a gap in play, basically what we always advise is that if we open here and we move lower and fail to take out that overnight low, you're looking for a long back up through the open to fill the gap, and then you monitor for continuation. Now, in the case of how this is trading right now, obviously there's not a whole lot of meat left on the bone for this gap trade. So if things don't change by 9:30, if the opening price isn't closer and tighter to that overnight low, maybe the gap trade isn't something that you want to take again, simply because the amount of reward there isn't that great, especially if you have to use a overnight low as the stop loss. It just doesn't make sense, right? So a lot can happen between now and 9:30, but that's the general framework that you would use for trading a gap fill. The gap and go situation is the other one, of course, where let's say we open here, we consolidate down in this range, form a bit of a flush point here at the pre-market low, take the break of that, and in that case, what do we have for targets underneath? Let me put this back to auto, scrunch this up, and we'll go digging, right? So clearly a level down below here around 35.57, 35.60 if you want to call it that. Scrunching the chart up one more time, what else do we have underneath? Not a whole lot, right? So that's kind of concerning, just looking at how emotional this move was to the upside. That leaves us with very little market structure to use as potential areas of support. We'll grab a little bit more time here to see if there's anything off screen, and then we'll sort of map out and put a hard level to it. So I would say prior resistance should act as support in this case. That's way down there at $30.25, give or take. And again, that's a pretty far move away to the downside, right? So if we really get momentum lower, that would be the potential next target, simply because the amount of emotional buying that there was in that section of the chart. Very poor structure there. Some upside targets in case we get the gap fill and move through the gap and back to the upside. I'd shift your attention over to the 30-minute time frame chart just to focus in on what happened on today's activity, and certainly this jumps off the page to me at 38.73 as a next potential area of resistance. After that, it's kind of smooth sailing up towards the high of today, simply because, again, of the nature of the lack of market structure that we have there when there was that emotional selling. In terms of, again, disregarding what's going on with earnings right now, let's go ahead and just gauge the strength or weakness thereof of today's close. So going from high of the move down to the low of the move, where's the 38.2, obviously the first blue line, we rejected right at it, right on the little bounce back here. So it does look like a rather weak close, like we could see some continuation to the downside, but again, earnings will throw a wrench, and just use that framework which I've outlined, right? You either look for the opening, something like this, as we mentioned, long through the open, fill the gap, or something like this, consolidation here, short for the continuation play to the downside. Is there even shares to short on this? Can you do it with puts? Yes, you can with both, right? So easy to borrow, and it looks like the put option chain over here has some decent volume that's been traded on today's, or rather this week's expiration. So all good there in terms of playing this to the downside. So if you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.